Hi guys, for today's trade of the day, we will be looking at the Aussie dollar. And as usual, we start off with the monthly chart. Now, in terms of the Aussie dollar, we see that it made a high in 2011 and it came all the way down to came all the way low in 2020. Of course, there isn't any clear support. What we like to do on a long-term picture is to find long-term support, long-term resistance. But in this event, since there's no clear graphical support, what I can see is that price has actually done, according to Elliott wave theory, price has actually made 5 waves down. 2, wave 3 here, and then wave 4, and this could possibly be the end of wave 5, right? So what we have here is Elliott wave 1, 2, 3, 4, 5. Now the rule of alternates in Elliott wave states that if wave 2 is a narrow wave, wave 4 should be a wider wave, and you can see from here that the distance of wave 4 compared to the distance of wave 2, alright, wave 2 is definitely narrower than wave 4. Okay, so since that's the case, wave 2 and 4 has satisfied the rule of alternates. Next, we want to check that wave 5 actually reacted at a key target for where wave 5 is supposed to be. If we were to take a Fibonacci extension from the swing high here, and we take all the way to wave 3 to wave 4, and we pull out all the Fibonacci ratios, realize that wave 5 has actually reached and reacted right on the 61.8 extension level, right? So this is a very clear wave 5 target done, and we can confidently put our long-term support at this level here. So let me just highlight it. Okay, and let's call this the long-term support. Okay, so we have our wave 5 complete at 0.55105 level, and what we want to do now is find the long-term resistance. Now, since there's also a sort of a lack of a long-term graphical level, though I see one rejection here and price testing this area once, we can actually put in a possible resistance level here. But in terms of Elliott wave, to be sure that long term we are actually in a reversal and going up, Elliott wave theory states that 23 wave 5, the correction wave have to break 23% retracement of wave 1 to 5 before we can confirm any reversal. So we do a retracement from swing high here all the way where price spike below, and let's pull out all the ratios. And we see that 23.6% actually falls in line with our long-term resistance level, right? So this is definitely a level to look out for. And let's just highlight the 23. Elliott wave theory also states that when price breaks above the long-term resistance, probably retest and you'll push towards the 61.8. But because that's quite far away, let's just focus on the 23.6 level first. Okay, so we have this zone. So we have this zone, we find our long-term resistance, long-term support, and now let's go down to the weekly. Now on the weekly, we see that price has actually reacted above the long-term support, and we can confidently say that price is probably going to push up towards this long-term resistance area. But how far can it go? Now we already have one long-term support. The next key level that we want to find is our weekly resistance, and for now we take our retracement from this pause here all the way to where price spiked below, and let's pull out all the ratios as per normal. And we see that 61.8 is right here where price made a pause, so we can highlight that level 61.8, and then let's put that level there. Okay, and let's call it our weekly resistance. I do not see any other weekly support, but if I had to put one in, I would think that we can just use this spike here. sort of like a weekly support, right? Okay, so now that we have our weekly support level, okay, let's go down to the daily. And let me tidy up this chart for you. Let's remember that this is the long-term Fibonacci 5 projection. Right, this is a zone. This one here. And this is the long-term 23.6 retracement level that price has to break in order for us to confirm that we are in a recovery. Okay, so now we have these levels here, right? What I'll expect is I'll actually just take a resistance, a retracement, sorry, from the swing low to where price currently is, and I'll pull all the ratios to just see whether price lines up with any Fibonacci levels. We see that this weekly support is actually close to this 61.8 level, and there's no other clear supports here. So price is currently kind of holding in the middle between the weekly support and weekly resistance, and we just know that our long-term bias is actually for price to bounce above this weekly support towards this weekly resistance, and possibly even longer to this long-term resistance area. Now, should price break above this long-term resistance, then we can confirm that there's the bigger picture, there's a recovery on the way. When price drops so strongly, what I would like to do is actually to wait for any pullbacks, right? To wait for any pullbacks, and in this case, I would actually use this long-term support as my stop loss, and I'll use this weekly support probably as my entry, as buy entry. And what I'll do is I'll wait for price to pull back towards this buy entry before I go for a long, with this as my first take profit and this as my second take profit. Now, what happens if price from here pushes straight up towards the weekly resistance, right? If price pushes straight up towards the weekly resistance and fails to close above the weekly resistance, what I'll do is I will short from the weekly resistance and play down at least back to this low again. Okay, so this is how I will play it. There's no real clear direction for now, but my bias and will be in line with the long-term bias. This is my buy entry, this is my stop loss, and this weekly resistance, let's sort of profit. Right, and once price is here, I'll close out half my positions, move my stop loss to break even, and then let the rest of the positions run towards the long-term target. That's all we have for today. Thank you.